All right. Good morning, everybody. Apologies for the delay, some technical issues, but it seems like they are resolved. Hopefully, you guys hear me. Tried a new microphone just for the next couple of weeks. Let's see how that goes. Okay. First things first. Let's go over the regulations. Some regulations came out, and those regulations are pretty much in line with what we've been communicating to the group for all these years. So, permissions goes, good morning, and thank you so much. Crypto decries stablecoin change in Senate market structure bill. So here's the thing, like nothing is really set in stone yet. Nothing is verified, confirmed fully. And it seems like everybody's unhappy. So banks who lobby against stablecoins and stablecoin issuers who lobbying against the banks, it seems like both of these parties are not happy at all. So let me just paraphrase what's happening. Stablecoins offer yields. Some of those yields sometimes are quite attractive, and those yields are sometimes even above what the banks may offer, which is quite interesting. How could that happen, right? Because what is the source of those yields? Like I've seen, like in one article in particular, well, the banks right now would offer 3.5%, maybe 3.8%. It's rare to see anything at 4% right now, because what banks do, they simply offer the yield relative to the current treasury bill rate. Okay, but then some stablecoins may actually offer much higher yields, like 6 to 8%. I've seen this in one of the articles while preparing for today's call. And of course, now the question is, okay, what's that discrepancy of, this 2 to 4% discrepancy? Where is that coming from? And of course, they can tell us, it's coming from DEX fees on DeFi protocols. But listen, that's not enough. That's not sustainable. So obviously, like banks know that something fishy is happening with those stablecoins. Now, stablecoins just want to attract as much traffic as possible, potentially subsidizing it out, maybe out of the revenues, maybe out of whatever. Maybe out of VC investors, but the end story is always the same. Like once the market share is going to be, if the market share is conquered by the stablecoin issuers, then what's going to happen is stablecoins will then start offering less attractive yields, right? It's a typical strategy. So banks know that, and banks are Web 2, and stablecoin issuers are Web 2.5. So as we said before, like you're not Web 3, good luck fighting with the bank. Like, good luck. Like, nobody can fight with the banks. Taxpayers cannot fight with the banks. And that applies to any country at this moment, like on planet Earth. So good luck for your stablecoin issuer backed by VCs to fight for it. I understand there's some elites covering you, but, and maybe the war will be at some point in time won, but I'm pretty sure if that happens, then, the largest banks or the largest members of the current banking regime, will just assume significant ownership of those stablecoin ownership as the middle ground for going forward, and therefore we'll just get the bank system of today control the future stablecoin system in the next couple of decades. So it makes no freaking difference to you as a user because you're being controlled by the same exact elite, and the whole point of crypto is to get out of that control. So what's interesting is, not much. Like, I mean, for lots of you guys, maybe there's something interesting. For me personally, like, it's kind of just common sense. We've been telling this to you guys for years, and some of you guys still don't believe us, but it's just like it's impossible for a Web 2.5 to try to fight with anybody Web 2. Okay, a Web 2 just has a lot more resources. It has a lot more power, connections. Good luck. Now, they do provide some. This article, in particular, does provide some evidence about kind of Web3 lookish solutions, like maybe Tornado Cash is one of those. So it includes significant protection for software developers, right? Tornado Cash, who was found guilty for operating an unlicensed money transmitting business after 3-week criminal trial in New York last year, so that was positive. Samurai wallet founders, I think, also getting some type of leeway when it comes down to being treated as a unlicensed money transmitting business. So essentially, if you're non-custodial, you're fine. If you're DeFi, you're fine, and we'll get to this in a second. But if you're a stablecoin, maybe yields will not be okay. Now, how did the stock prices react to this? So we have Circle, and Circle is a difficult one to judge, right? They just started trading. I didn't know about that actually. Kind of didn't recognize, didn't how to say, didn't register in my brain that they only started trading June 2025 apparently. So kind of, it shows 2x. You're still, still up. You're still up. Like, you doubled your investment since the IPO. But if you're looking at some type of peaks, and that's not necessarily the right way of judging it, but you have this peak at 263, right post IPO, and you down, two and a half times. So you're down 60% off your highs. Again, still double your money. So, from that perspective, still positive. But let's see for how long this continues. Okay. Now we have Coinbase. Coinbase is a kind of a longer chart, and we see that since IPO, Coinbase is down 50%, despite Web 2. Web 2.5 angle, despite making commission, despite I need to select my words very carefully, screwing users over and over again by pretending that the backend does not work, and therefore users just cannot close their positions, and they just X'd out through margin calls and stuff. Despite all that, the stock is still down 50%. How come the founders of Coinbase are not under some type of trial yet? Beyond me. Like, apparently some really, really powerful people are lobbying this thing, and the thing is still down 50%. Now, since 2021, would be nice to look at that chart of Bitcoin. I didn't pull it up. I'm pretty sure it's up. I'm pretty sure it's up some. But if you guys could look it up, since April 2021 up until now, what happened to the overall crypto? Now, of course, most crypto protocols did drop 100%. Like, maybe outside of Bitcoin, everybody dropped. But here's the thing: like, some of these protocols are, as we know, have lots of structural issues, lots of tokenomics issues. They were not supposed to be anything, anyways. Right? Like, kind of, and when it comes down to tokenomics, it's not about utility angle even. It's more about the allocation. It's more about that distribution, right, of tokens to the team and to the to the early VC investors who are obviously dumping stuff left and right, especially in the current economic situation. And I'll explain this I'll explain my view in a bit. But it's like, it's quite interesting to see that, all these Web 2.5s not really doing that well. And that's not a surprise, because again, you're trying to you're trying to fit a square peg into a round hole. Like, that's all you're trying to do with your Web 2.5, type of angle. And it's nice. Listen, you as a founder and, your team probably made some early investors probably made some, good bank for your initial, attempt and profit and whatever. But it's just not a sustainable business, right? Like, you will be always fighting with Web 2s. So this article, one of these articles, like, kind of, that was trying to find specifically about DeFi. So I'll show you the clause, from this one, from DL News on the DeFi. But they all say, kind of, the same thing that, what regulators are trying to do, they're really trying to go after cash on-ramp, off-ramp solutions. That's expected. Like, that's absolutely expected, right? So, if you're trading from dollars or euro to, to Bitcoin and back, sure. Like, you shall be licensed. You'll be holding cash. I mean, do I personally agree with this or not? That's a different story, but at least it kind of makes sense. Like, I'm not necessarily for it either, but at least it makes sense. But when it comes down to kind of post DeFi, like, kind of like entering anything on chain, and specifically on chain with, on chain with no freezing functions, actually decentralized, permissionless, like not the Web 2.5 definition of on-chain. Like, Solana is on-chain from that perspective, right? But they're losing validators significantly. They, I think, lost about 75% of their validators since they peaked. and they keep losing it because it's just impossible to fucking maintain it. And then we spoke to some professional validators, like essentially enterprise validators, in the last couple of weeks, and they say the same exact thing. Like, we gotta present them, Ghost, and say, hey, like, with Ghost you can actually have access to real returns, not nominal returns on the bridging fees, but like, real returns, right? Because most other protocols offer nominal returns, whatever, 15%, 10%, 30%, but then the inflation, as we covered, like, many months ago, inflation kind of reduces that nominal return down to real return, which is like often negative. In most cases, it's negative, and positive in just like Ethereum and Tron cases, and maybe Polkadot. That's about it. And those kind of whatever professional validators do, like, they do agree with this. Like, say absolutely. And their business model, by the way, is they charge those blockchains fees, because that's the only, for monthly fees for running nodes, because that's the only way to stay positive. So if the protocol is so fucking positive that the protocol itself has to pay validators to run the nodes, like, what are we fucking talking about? Like, what Web3 are we talking about? Like, the whole point of Web3 was the whole genius, like the beauty, like elegance of Bitcoin, Ethereum, is as an individual, you can contribute to the ecosystem. You can maintain the ecosystem that you yourself will be using, and that's the genius of it. Like, you are directly maintaining the infrastructure, and you're directly benefiting from the infrastructure, both by maintaining it and also by using it. And you don't have to rely on anybody else to maintain it for you, which is not the case with Web 2.5. So, again, the Senate seems like specifically targeting on-ramp, off-ramp, which makes sense. That's what we've been, talking for years now. How come stablecoins are under threat and everybody else are kind of not under threat yet? Some DeFi protocols like Aave, Uniswap, in particular, those cases have been dropped. Well, because we look at the money, and we probably see that Coinbase probably makes a lot of money, and stablecoins probably make a lot of money. And you can argue, well, when DeFi will stop making a lot of money, regulators will try to come after DeFi. Yes, and they tried, and those cases have fallen so far. And needless to say, of course, like, if DeFi starts making some super comparable like revenue, which actually they kind of do, some of the protocols actually do. Yeah, regulators will likely go after them, but regulators have nothing to go after them if those protocols are Web3. Like, how can you go? Here's the thing, like, we can say, okay, they're gonna go after Aave, they can go after Uniswap again. But they try to go after Bitcoin. Every single country tried to go after Bitcoin. So where is that? How come Bitcoin is not only, like, not illegal, but it's like now we have ETFs everywhere, right? Like, because it's pure Web3, you cannot do anything about it. Yes, of course, regulators will try to cause trouble, 100%. But they will have to, at some point in time, just like they do with Bitcoin. And they're not even trying to go after Ethereum. They will have to, at some point in time, just default on their attempts to regulate anything. So now, on the DeFi component, so I was searching for the DeFi in particular, because I remember I read something about this bill last week, and I couldn't find this article, this piece that I wrote. Maybe I read like a tweet or something, a tweet thread. But so in particular to DeFi, specifically DeFi, and again, you have to be very careful what DeFi is, because Coinbase is also an investor into Circle, and therefore Circle and Tether. By the way, where's fucking Tether? Tether is untouched. Like, not a single time anybody went after Tether. It's so crazy. Like, who is behind Tether? Like, what? They're like decentralized? No, they're not. Right? They're absolutely not. How can you be decentralized? Like, you're Tether. Like, you have to hold cash somewhere. Like, it's crazy who is covering Tether. Like, somebody, like, who is that elite clan that is so freaking powerful that Tether is never, like, under any type of scrutiny? Like, just ask yourself that question. Not that Tether is not any utility, probably does, but like, it's adding utility just because it's overshadowing any other, more pure Web3 protocols, such as, say, DAI. And even DAI got impacted by all these stablecoins to get it to Sky, right? Which now may potentially offer some freezing functionality down the road. So, like, it's a fight for the digital dollar expansion. In fact, I've read some interesting pieces, potential conspirological, but listen, anything conspiracy seems to be more real than not, okay, nowadays after the Epstein files. So, in particular, the theory of those the theory behind this digital things, digital stablecoin situations is the petrodollar is going to die, and that was apparently in books. And therefore, then, since the petrodollar is over, let's go for the digital dollar and use the digital dollar as the you have to control it as the United States of America in order to really, keep being the hegemon and control the financial sector, right? All the transactions we'll be controlling. So, apparently that was in the books. Apparently, Iran was, the power that is difficult to battle. Some news now regarding this U.S., Israel, Iran war, saying that Iran and Israel will crush Iran, and some say that Iran will absolutely win this war, and Iran will potentially become the local hegemon controlling, the entire Middle East. And some say that Israel will cease to exist. Whether I believe in this or not, I don't know. Nobody knows. But if that was in the books, if the likes of CIA knew that that's going to be the most evident, the most apparent sequence of events, then it makes sense to assume that, okay, so petrodollar is over, but then how do we make everybody still use the dollar, well, digital dollar, right? So we have to be the one there, and maybe that's kind of the reason why the Senate, Congress trying to push for these laws ASAP, trying to regulate it all, so that the U.S. does not lose the leadership in being the hegemon of the currencies. So we'll see how that plays out. But so DeFi, the bill does include a major victory for the crypto industry. Again, crypto industry is we have to be very careful. It has supposed to be specifically Web3 because on-chain, Tether is on-chain, Circle is on-chain. It does not mean that they are really on-chain, if that makes sense. So language protecting developers of non-custodial software from prosecution under money transmitting laws. Booyakasha, amazing. Now, U.S. prosecutors charge software developers with unlicensed money transmission. Here we go. Yeah, so Tornado Cash and Samurai Wallet. But last year, jury found so whatever, everything is good. So Roman Storm is out. That's amazing. Separately, developers of Samurai Wallet pleaded guilty to violating that law. They were sentenced to 5 years in prison. Okay. Now, DeFi. They pleaded guilty, otherwise they would probably receive 20 years. So now they'll have to still serve the sentence most likely until they get the pardon from the current administration or future administration. DeFi proponents argue that prosecutors' legal theory threatened the very premise of decentralized finance as those protocols never took custody of user crypto. Booyah. That's amazing. While truly decentralized protocols have few, if any, obligation under the bill, centrally controlled interfaces. And remember, we kind of go back to that, right? They tried to push for this law about 2 years ago. Now it seems like they're coming back to it. But make it easy to access those protocols would have to comply with several requirements meant to combat cybercrimes. Websites that offer access to DeFi protocols will have to block sanctioned addresses and monitor transactions for signs of money laundering or other criminal behavior. So now, DeFi protocols, we have to get access to this database of whitelisted addresses and then blacklisted addresses. Somehow integrated, so therefore DeFi protocols will have to run centralized servers. And of course, what leads, when that is happening, when DeFi protocols run centralized servers, which we, for example, don't, right? But when that happens, that creates, incentives, right, to misbehave and start controlling more and more information from the users. That's what MetaMask is doing right now. I think MetaMask is totally going that route, right? So they are offering a centrally controlled interface via the browser extension. So now they're, collecting your geolocation. Now they're, mashing all the wallets together. You have to specifically turn it off. And even if you turn it off, I doubt that they are not collecting stuff on the back end. And then, obviously sending it anonymously, right, to the likes of Chainalysis for analysis so that, it's all crap. It's not crypto, guys. It's Web 2.5 bullshito that is happening, and we need to fight against it. Now, why do I say we have to fight against it? Permissionless Go say Cantor, Visual, and Lightning behind the other. Yes. By the way, Cantor, specifically about Cantor. Cantor was from what I know, the largest investment bank that was hit in 2001, 9/11. Okay, by the planes. Amongst all the other banks, Cantor was hit the most. And back then, Cantor was the legend. It seems like from what I know, again, Cantor was the likes of Goldman Sachs back in the day, and they got totally crushed in 9/11. Whether was that some type of, I mean, again, going conspiracy, was that some type of victimization, by the let's go this way, by the Zionists? Listen, who knows? Was it Mossad who organized those attacks? Now, who knows? Like now, anything conspiracy is like, it's not like 1% accurate and 99% inaccurate. Like now it's like 50-50. I think conspiracies, after I've seen files, like significantly increase its chances of being right, of being true. Again, I'm not vocalizing my opinions. I'm just saying what some people are saying, right? I'm just vocalizing some conspiracy theories over there regarding Cantor. So meaning Cantor was so fucking connected, and therefore they still are, still is connected, but it was, the sacrifice was needed, by the Zionists to take or whatever, right? So would not be surprised if Cantor is really behind the curtain pulling all the strings. Who knows? Now, but why? Like, so governments clearly want control. Governments need to, punish the bad actors by, installing some type of surveillance, because they want you to live in a safer world, right? Like that's kind of the excuse, right? Like the same thing happens in the financial sector. Like, why do we need to control your banking? Well, because we just need to follow the money. Terrorists is always about the money. Well, okay, so what about Iran? Iran, was that following the money? Like, how many billionaires do we have out of Iran, right? And yet Iran is absolutely so far holding in the war, despite all the attacks, despite killing the entire, top leaders, and top leaders in Iran being killed every freaking day by targeted attacks of Israel in the U.S. So how come Iran is not falling? So maybe the theory about follow the money is not accurate, but obviously it was just a fucking excuse, right? Like it was used just to have more control, because once you have more control, you can then manipulate markets because you have so much data. So you can manipulate markets way easier. And I think that's what's really happening. But why am I personally against this control? Like what happens? What's so bad about reporting everything properly, trusting the government will do a really good job? Like what's so bad about it? Because we have to trust our government, right? Like otherwise, why do we live in this country? Or governments, if in case many of you, some of you guys have dual, triple citizenships and stuff. Well, the reason why I personally totally dislike this kind of agenda is governments don't really take care of you. And that's the biggest dichotomy that we need to resolve with ghost chain governance. We need to bring it back to how it was. Good morning, Federal. Those who want to take control also need to bear the responsibility, okay? And what we have experienced amongst powers globally is this disconnect between responsibility and privilege. If you have the privilege, it's fine. As long as you're the first one to fucking die in war, as long as that's how it was in aristocracies. Like we can say whatever monarchies were bad. Okay, but again, in monarchies, in latest ages of monarchies, that same disconnect took place. That's why Napoleon had to overthrow the monarchies in favor of republics, right? But the monarchies began in such a way where aristocracies were the first to die. Peasants, yes, they were definitely, being, kind of the lower class. They had to kind of bear, all types of negativities, from work, overworking themselves and no healthcare, blah, 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 no ownership. Although ownership did exist in many societies of that era. But the aristocracies were the first to die. Aristocracies were the first to serve in militaries. In fact, serving in militaries, like paying with your blood, was for sure and the fastest way to grow above the hierarchy, right? So we don't have this situation happening today. The leaders are not risking shit. In fact, the leaders are just absolutely usurping power and manipulating the general population and using the general population to profit even more. So not only you get significantly more privilege today, but you also have zero risk. And that same thing happens with the crypto stuff. So first things first, let's go for, so I kind of searched for IRS leaked information in the news, and for the most part, we see Trump. So Trump news took over, like how Booz Allen tech contractor took IRS job specifically to leak Trump's tax records. Like, for fuck's sake, like, what is happening? Good guy or bad guy? Like, that's called, like, that's, I'm sharing data with IRS because I'm expecting full privacy, and clearly that's not happening, right? Yet consulting firm Booz Allen Hamilton apparently, like, just did that. So, like, what? Why? Like, how come they're not in jail? And they'll probably like have some little fine. Yet the entire reputation of IRS from just this alone is obviously teared apart. And we all knew it's gonna happen, right? It's not like this is like, oh, like nobody got surprised. Like, I'm pretty sure you guys didn't even hear about this news. This is like normal, okay? So then you go like down the road, like it's mostly Trump, okay? Just because, But then you go here, like IRS leaked info. Data, February 12th this year. I mentioned that to some of you guys during Wales Wednesdays. Data of thousands of taxpayers wrongly shared with DHS. Like, it just happens again and again and again and again. Your stuff always gets leaked all the freaking time. Access to, to your tax information leaked all the time. And that's the United States of America. Like, the country that produces more revenue than any other nation, any other corporation in the world. And we have this with IRS. What can we say about European Union? What can we say about developing countries that you have to share your information there? You essentially, whenever you share your information there, you instantly become a target. Like, instantly become a target of malicious actors, right? Corruption exists everywhere. And the thing is, if you are kind of expecting to hold your crypto in non-custodial wallets, meaning in your wallets, the wallets that you control, you become a target. Like, you literally can risk your, like, in today's environment where money, where governments aggressively seeking for milking the population for money because of all the wars, because of all the crisis. Now, if the oil crisis continues, by the way, the oil crisis is the reason why gold is falling, because countries selling gold because they need oil. Right? Kind of the priorities are, I need to sustain my economy through oil first, and then even if I have to drain my gold reserves, I'll do that. That's why gold is falling. That's why silver is falling. Right? So, interesting trade there. Those who saw it, I didn't, but those who saw it, interesting trade. Right? So, like, they will gladly share information about your non-custodial wallets with whoever. Just to, maybe you'll come home and God forbid, like everything's overturned and it seems like your USB drive is, kind of doesn't exist anymore. It's not in your house, nowhere to be found, right? And your funds are kind of leaked. And then what do you do? So essentially what that does is it kind of, since you have to report everything, it kind of pushes you to just be safe. How can you be safe? Well, how about you use the existing custodials for your custody? But what the problem with that? Like, why is this so bad? Like, why don't you just hold your crypto in Coinbase or BlackRock? So we have precedents already, and those precedents are like totally, how to say, like those are the positive precedents. Okay, so here's one: Mt. Gox. Bitcoin's finally being returned. This is from July 5th of 2024. So how is it returned though? So it's returned. It's in a highly atypical turn of events. Like it's positive. It's so fucking positive. You actually got your stuff back, right? Like most often than not, exchange goes bust, custodian goes bust, and you get nothing. So therefore, you just don't invest in crypto. Period. Okay, but why do you invest? So if you want to invest in crypto and go for custodian, you run the risk of never seeing your money ever. Mt. Gox customers actually stand to profit financially from their involvement in the bankruptcy. You see, profit financially. Let's read more. What does it mean? Because only a limited amount of Bitcoin is recovered. Customers will receive only 15% of the Bitcoin they held. How is that positive? See, however, the 100-fold increase in price in the intervening period means the dollar value of the coins will far exceed the worth of their original pile. Okay, so they're saying, hey, it's a positive thing, right? Like, yeah, listen, your Bitcoin got stolen. You had 100 Bitcoins got stolen. Okay, now you'll only get 15 Bitcoins back. But listen, the price went up, right? So it's a positive thing. It's not it's positive. It's like thank you for that, but it's a negative thing. Like why not? Why don't I see my 100 bitcoins? Why only 15 bitcoins? Like what's happening? So this is like a victory. This is everybody's celebrating, but you just lost like 5/6 of your holdings. How is that positive? Well, it is apparently positive. So that's Mt. Gox. Again, atypical, highly atypical, right? So it's extremely improbable. Now let's go FTX. FTX, amazing. Like it's everybody's celebrating, like champagne everywhere, right? So okay, so where is this? Almost all affected users will receive 119% of the cash value. That's important. Cash value of their deposits from 2 years ago. Okay, so that's extremely positive. 119. I got 100% in, and I'm getting 119% out. Super successful. Now let's read the print. That's because the repayment recognized the value of the crypto holdings on FTX when the exchange collapsed. Bitcoin and Ethereum trade at 20,000 and 1,200 respectively. So Bitcoin today is 60 grand. Ethereum, after all these, like shenanigans with, roller coasters with prices, trading at 2,000. So you're getting 119% of 1/3 of your Bitcoin and roughly 60% of your Ethereum. Right? So you locked down. Like completely fucking down. Like, oh, and it says like 65 and 2,400. Well, that was at the time of this article, which was whatever, also 2024. Of course, nothing changed. And those are successful cases. Those are very successful cases of where your custodian screws up and you still see your money back. In most cases, you just don't see your money back. Now, of course, you can say, okay, what about the likes of DeFi, like Balancer? Balancer got hacked by 120 million, and victims didn't, consumers, holders, whatever, users, didn't receive any of this. Yes, it happens. So audit your code. Like make sure you audit the code. Like you don't have access to the code, don't invest. And if you do invest what you can risk to lose, right? Like don't invest your entire life savings unless you're a techie. Crypto is not meant for techie. It's not meant for average, soy people. Like it's meant for normies, but really for gigachads. Like you want to get above average returns. You need to be you need to have above average understanding about what crypto does. To which, of course, the answer will be, okay, but that's not the same with stocks. That's not the same with all the other assets. Well, fucking go stocks. Go gold, guys. Go silver. Good luck with that. How do you buy gold? You can buy a gold ETF. Okay, fine. But how do you buy physical gold? Like, you know nothing about it. How do you buy physical gold? Is that easy? Hey, just one click of a button on the website. Okay, do you know the gold sold to you doesn't have any scratches? How do you know? Is it pure gold? Do you know how to know if it's pure gold or not? When I ask people in emerging countries, like, how do they know? People say they just know. I'm like, how? They just know how it looks. I'm like, how do they know how it looks? They say they just look at the gold and they know if it's real or not. I'm like, how? Like, because they spent 30 years dealing with gold, so they know. They're like professional gold dealers. They know like how to see from the bleak of the light of the gold if this gold is real or not. So, like, it's been sold to us that investing is easy. It's not easy. What about stocks? Oh, just buy S&P 500. Yeah, buy S&P 500 last, 15 years. What about, from 1930 to 1950? What about from 2000 to 2010? Buy S&P 500. Where the founder of Vanguard himself didn't believe in the stock market anymore. There was an interview. I still need to find that interview. He said, like, between 2000 and 2010, there was 0% return. Everybody went to bonds. That's it. Stock market was over. And he said, I had some family things I had to pull from the stock market myself. Everybody pulled out, including the Vanguard founder. Come on. Like, no, it's not, like you're just taking 5 years of that and say, oh, it's easy to invest in stocks. Okay, let's see for this year and next year and the next 5 years, will that be easy to invest in the stock market or not? It's not going to be easy. You have to understand it. So today's investors, of course, you have YouTubers who say, geez, just invest 10% of your capital into S&P 500. You'll be growing at 8% a year. Okay, will you? Let's see if you're going to. Let's see. That's an interesting, scenario. Because you don't take into consideration some health issues, God forbid, you may experience, and you'll need some, quick access to liquidity. Always at the worst times, right? Or some other liquidity events that you need to get your access to cash at the worst possible events, like when the markets are very low. Like there's analysis, like not everybody's making that 8% on the index. Index is growing by 8%. Does not mean that every single investor who invested makes 8%. Those are two different things. And we have professional investors. We have professional hedge fund managers who manage investments. It's not for everybody. In fact, you cannot even invest in those hedge funds unless you're a high net worth individual. You have to sign a special paper for that. So this myth that's like investing is easy, no, it's not. Now, investing, unfortunately, became, how to say, a requirement because of inflation. So again, that's just, that's the modern monetary theory. There's inflation, which is apparently good in their eyes, right? They hate Austrians. Okay, fine. That's very good. Okay. So because of the inflation, you have to invest. So you cannot just be, kind of like a qualified doctor, a qualified actor, a qualified lawyer, a qualified whatever accountant. You cannot be that anymore. Now you have to be a qualified whatever profession plus a qualified investor. So therefore, like, you diluting your focus, and we don't see many innovations in the last 50 years because our focus is consistently being diluted away from what we do best, which is our jobs. We have to become investors. And then they sell to us, well, since you guys have to be investors to fight inflation, how about we make it easy in one click? It's a fucking myth, guys. It's a myth. Don't believe it. Compare your returns to the index, and most of you guys will be surprised that you are not beating the index. You did everything right, and you're still not beating the index. And don't compare it as far as like, your investments that you invested. Compare it to the overall cash that you had. That cash that you had, let's assume 20% you invested, 80% you didn't invest. Okay, so you have to adjust for that. Like, your return is just on 20% is aggressive, but 80% you have zero return or whatever, 80% return on the interest rates, right? Check out your house. Your house went up in price because of Zillow. Congratulations. Can you sell it at that price? Check the actual sales. How much discount do you have to offer to actually sell your house? And then also, don't forget to subtract the property taxes you paid over the years and the maintenance fees and the repair costs over the years to actually find the right basis. Like, it's your investment minus your expenses and then minus the discount for selling it. And you will see that you are probably at best breaking even on your real estate, while inflation is actually increasing. And it's not increasing 3%. It's probably going 7% every year, right? So those are important considerations. And YouTubers sell an easy investment kind of, hypothesis to you, but it's not real. And I'm just being real here. I'm just being honest. Like, yes, if you want to, that's why we do so much education. We try to do that education in Wales, on these calls on Wales Wednesdays, in our private conversations with you guys. Like, we're trying to, first of all, educate ourselves. We're not oracles. We don't know everything. We're trying to educate ourselves. And then we're trying to share whatever we learned with you guys as well, because we understand that's the only way to really make money, to know what the hell you're doing. And that's not easy. And it's never going to be easy. Okay, so that's this. So that's kind of my issue with just holding everything in custodians, right? Because you just can't. So therefore, if you hold a non-custodial wallet, you become a target. So you either get out of crypto, or you go to jurisdictions where you can, kind of report stuff or non-report stuff legally and still be fine, right? And maybe the most kind of logical set of events after this, once we get more and more adoption in the crypto space globally, is to start generating marketplaces where you can buy for stuff in exchange for crypto. And those marketplaces did exist. Monero did a great job with that. Lots of those vendors have been closed since then, but still, they tried. Bitcoin community tried that too. Ethereum, I think, tried as well. So we just need to keep trying, where you can actually survive in the economy by just paying in crypto without having to rely on centralized providers. Like in the Middle East in particular, they did issue those crypto cards. But those crypto cards on the back end convert crypto into cash. And then you pay with cash, so you have to rely on the likes of Binance and Bybit. So again, that's not okay, because you hold your crypto in Binance. When Binance goes down tomorrow, your crypto is gone, and nothing is going to happen. Nothing. You will get nothing for it in most cases. So that's not the model that we need. We need the model direct, peer-to-peer. What's so difficult for the governments to understand? Well, I know what's difficult. They understand. It's actually easy for them to understand that they'll be losing on the control, they'll be losing potential on taxes, they'll be losing on everything. So it's just not beneficial for them. They really understand it, and that's why they're doing all these bullshit fucking regulations. Okay, and of course, we need to be compliant. That's a disclaimer. Everybody must be compliant. Please follow the law. Okay? In those we trust. So let's quickly have about 10 minutes. Let's quickly go over Goes DAO. So this is the forgotten landing page of DAO Goes DAO, DAO.GhostChain.io. I'm pretty sure most of you don't even know that this page existed. And I myself forgot about it because we just go to the app.DAO.GhostChain.io. Now, the reason why this page was not really developed because we went multi-chain. So when you go multi-chain, it's difficult to understand what these metrics could be. So total staked, okay, fine. For single chain, whatever, right? Like it's just total staked. You just put there. Then treasury balance, it's easy. Then APY, you just put the APY for that specific EVM, right? Mostly Ethereum, or for Olympus DAO in particular. But when you have multi-chain, what do you do? And how do we convert it? And thinking about this landing page led us to remodeling Goes DAO. Because we understood, like, we thought about this for months before, but the real discussion started a couple of weeks ago. We thought, like, how can we feature those multi-chain efforts? At some point in time, we just closed it down. We said, we're never going to do this page ever. We did that, like, in about December or so. We said, screw that. Like, you know, we're not going to do this multi-chain page. But then, kind of after we launched Mortar, switching between Sepoy and Mortar, because MetaMask became a total piece of shit, is becoming more and more difficult. So therefore, we need to have some type of, you know, multi-chain source anyways, especially for the newcomers. And those three parameters in particular become challenging. And also app, like, okay, so app, you go to Ethereum, but in case of multi-chain, where do you go? So this is a very, very temporary solution right now. We have some ideas about it, but this is how it's going to look like. Chances are this yellow thing will go. Chances are this blue thing will go. This dark blue thing will go. Chances are those metrics will actually go. Chances are these buttons will actually go. Okay, we actually discussed it. And chances are, instead of like these, like, you know, price and APY, we just have APY. And the APY will be relative to the size of the bubble itself, right? Like, let's assume this one is 760, it's going to be smaller, and this one is 1,000, it's going to be bigger, stuff like that. So the user comes into this circle, to this ghost, you know, our logo, and then they see different like chains with APY specifically, and you just click on that, and boom, you just redirect it to that specific chain. So essentially, follow APY. Once that's a hypothesis, that's a theory. After speaking with you guys, after also kind of reflecting on our own perception of kind of what the user may want, the user for the most part does not care about the price. Here's the thing: if I can stake at 760% APY, and my price of entering is like $69 on Classic, but on Sepolia it's like whatever, it's like $30. Say it's a better price on Sepolia. It's a real challenge. Like, I'm not sure which one is better, actually. And I'm not like trying to say like how the user would think. I just don't know what's better. I just don't know if it's easier or better to enter at $30 with lower APY, or enter at $69 but at a higher APY. So that's a question. But I think users just care about APYs. And our APYs are backed by DEX fees and bonds. And we'll actually be optimizing the UI towards that. That's the idea. So the hypothesis that, so again, we kind of scratched this idea completely around December, like we never get to do it. But then recent feedbacks, and thank you so much for your feedbacks, told us that, oh, like APY is the thing. So we just need to follow APY. Okay, so let's assume you follow APY. So you get redirected. Like you click on that, you get redirected. So this is the new UI. It was launched, I think yesterday, actually. So this is Sepolia. It's not finished. It's just the beginning, but some things have been finished. So first of all, DEX, there's no longer DEX, and there's no Uniswap behind it, because we just have Uniswap right now. Now, if you're going to have multiple DEXs, like say Sushi and Uni and whatever, 1inch and whatever, balance, well, no longer Balancer, right? Because they're going bankrupt. Again, whatever. So we just call this swap. And you can get access to the faucet, to the wrapper right there. Boom, now you can just wrap it directly. So the wrapping function is here. So we don't need the wrapping window. Now 3.3, the reason why it's 3.3 is because you buy it. So 3.3 is buying. Buying and staking is 3.3. So both swap and stake is 3.3. So that's what you should do. Now, as you see, there's no S Casper. S Casper is gone. So now on the stake, when you start staking, it's E Casper versus Casper. Casper, E Casper. There's no, oh, gas Casper, we need to be removed from here. Okay, we'll need to remove from here. Forgot about that. Okay, so it's just easy. Casper, eCasper. No, like, you'll see Ask Casper on the background, but we won't have Ask Casper on the front end. So no UIs for the Ask Casper. Very difficult to mess it up. Now, bond is 1-1. Yesterday, there has been a proposal to push for 2 new bonds. Those are more aggressive. Now, the reason why we push for them is because this APY of 1,000% needs to be maintained. And there has not been that many bonding transactions because those 2 bonds are a lot longer, the first 2, a lot longer in duration and deadlines and maturity. So we introduced like more aggressive bonds because we need to maintain this APY, right? So we were a little bit busy with other things, but we pushed for these 2 bonds. So let's see how they will be enriching the DAO protocol. Now, the gold stake, and this is the one that we need your opinion. So you guys threw your opinion. Thank you so much. We need more ideas. Frankly speaking, I don't like any ideas so far. I don't like my ideas either. I don't like anything. Maybe the 2 that I kind of liked were dual staking and bridge staking. Bridge staking was by Sparta. Dual staking was by Histia. Thank you so much for those suggestions. I think Scorpion introduced Link stake. General Freedom, I think, introduced something W stake. So Warp or whatever stake. So I don't like any of those. Whatever there are multiple choices for the proposal, I don't like them either that Cosmos put together. I don't like them either. I just don't like anything so far. So I don't know. We need to figure it out. So one thing to remember, this is going to be like a verb, right? So swap is a verb, stake is a verb, bond is a verb. So ghost stake should be really ghost stake or bridge stake, right? If it's going to be stake squared, it's going to be stake squared. I think many of you voted for stake squared so far. Maybe that's the best from what we have. Of course, it could be changed later, but nice to know like what we do. It's going to be bridge stake or link stake therefore, so it has to be a verb. Maybe you guys can create a better verb. Maybe cross. I don't know. Maybe just call it bridge. Who knows? Like, so please keep throwing ideas. Like, we listen. Like, I'm actually aggressively screening for those ideas. I just don't like them so far. I don't like our ideas either. I just don't like. I think it has to come to us, right? It has to somehow come to us. Ghost Connect. It was a great fucking suggestion. Okay, like I like it. Like it was a great suggestion. It just didn't reach out. Didn't come to us before. But Scorpion suggests Ghost Connect was great. So think about this. And if we fail, whatever, we'll just go with whatever we have, and then we can change it later on. So not a big deal, but kind of a big deal. So what we're going to change is more changes coming. We'll integrate Ghost Connect on the user interface. We'll change the right panel a lot. You will see that. We will also upsell the users on the double stake, meaning you'll make it more evident. So after you finish staking at this APY, 959% APY, once you claim your proceeds after the warm-up period, which is currently set to 2 epochs since yesterday, actually. Now it's 2 epochs. You will see the problems with the warm-up. Warm-up is totally positive for the protocol, a little bit problematic for the user, but not like problematic, like meaning impossible or whatever, or bad UX. It's very good for the protocol. It's very, very good for the protocol. And warm-up has to exist. We didn't have it here on purpose, like for testing purposes, but you will see how difficult it is sometimes to claim bonds. You'll see how difficult it is sometimes to claim mistakes. But it's very good for the protocol. However, those double stakes help you deal with those durations. They help you get out of those warm-up periods while simultaneously introducing double stake. So we're playing with this theme of double staking. We're playing with this theme of like APY stake, and then instantly you'll be upsold to, if you want to bridge through and therefore get access to the double staking. So therefore we'll have to be connecting Ghost out to the Ghost Lite, and we have to make Ghost Lite nomination a lot easier than it is today. So like, right, because we need to make sure we manage expectations. Like if the user does in fact bridge in, we need to make sure that they can nominate somebody to earn the double stake rewards. So that will be that's going to be added soon. The reason why it's taken a little bit longer is because the next change is likely going to be Hoodie. We need to conclude the vote, but it was Hoodie. Thank you so much for all your votes. And on Hoodie, we would like to present new series of smart contracts, and those smart contracts will be different from what we have today. So almost every single deployment, we introduce something new. That's been very good. However, while the double stake upsell is going to be possible on Hoodie, is going to be very challenging on Sepolia and Mortar. So therefore, we'll have to have two UIs simultaneously. Therefore, we have to put all these if statements, and that's why it's taking longer, because we have to put if statements. Hey, if it's Sepolia or Mortar, keep the old interface. If it's Hoodie and whatever the next one, Pulse, Gnosis, whatever, go for the new interface with like double stake and upsell. So that's going to be that. And these have to change. These will have to change. So we don't upsell anybody here really, and we're not making it easier for anybody to interact with the Ghost DAO. So we have some ideas how to do it, but essentially the idea will be to use those, we call them papers, use these papers to help direct the user towards swapping, and then after that staking, and then after that bonding if they want to for LLP, and then after that double stake into the bridge. Those are some ideas. Or maybe we'll incorporate some type of charts here, we don't know. So that's what we have. Now, user, thank you for your effort to pull us from the ever-growing regulation. Absolutely. Thank you so much, guys, for fighting it. Guys, it's a fight. It's going to be a battle. But it's real. Like, if we don't do it, nobody's going to do it for us. Like, we have to do it. Like, we have to create a vehicle that generates monetary value consistently while adding value to the people who use it. And then we'll be able to use that monetary revenue or whatever monetary aspect to help shape the society, either by lobbying laws or creating our own little nation somewhere, buying some islands and just proclaim it to be independent, paying for military. And it sounds crazy today. It sounds like it's too much. Okay, yeah, but the fact that Iran can sustain for 3 weeks with no fucking resources is also crazy. Sounded crazy just a month ago, and not crazy anymore. The fact that Dubai will probably fall, and Saudi Arabia, by the way, closed all their real estate projects, including the Line project, because they have no money anymore. And the fact that the stock market, despite inflation, is dropping, and the fact that the gold is dropping despite inflation, that has been crazy a month ago. Things are crazy. Things will move fast. And we can actually, even in our lifetimes, can actually make a difference. And final thought. So are we too late for crypto? Because AI is taking, by the way, where's AI? I don't see that many AI, hype. Hype is kind of slowing down a little bit, as you noticed, right? It's not as hype as it was a year ago. Well, let's wait another year. But one interesting thought, actually Cosmos said that. I'm like, maybe I've been late with crypto. Like, maybe we should have just launched 5 years ago. I've been late. And he said something interesting. He said, listen, did Bitcoin actually shape the society in any way? Like, realistically, did it? And the answer is no, it didn't. Yeah, some people got Lambos. I get it. Some people, got generational wealth by essentially winning the lottery. Like, what they've done is just winning the lottery. Okay? You could have just won the lottery in Vegas, like, same way. But, or bought NVIDIA. Like, whatever. Like, it's not replicable. It's just luck. But Bitcoin really didn't shape the world at all. Like, if you think about this, it didn't. So far, Web3 did not shape the world, but that's the only mechanism today, given our access to computers and internet layer, that's the next logical step forward for the humanity to start actually shaping humanity with Web3 angle, right? And obviously it's been shut down by AIs, then it's going to be robotics. Like, nobody, forget about Web3. Web3 does not exist. By the laws, like making it difficult to do crypto. How many regulations are there anti-AI? How many regulations are there anti-robotics? Can you please tell me one? Like, I know some, like, Disney is suing ChatGPT. Okay, fine, OpenAI. But, like, on the government level, do we have anything except for them being invited to the Congress and, like, appearing in suits and, like, and having lots of press coverage? Like, almost, like, it's like they pay Congress to appear in front of Congress, to appear more important. Has there been any regulations? Are there any regulations being planned? Nothing. Web3 is constantly being fucking regulated. Non-stop. Why? That's the only enemy of the state. Literally. No other enemies. Therefore, that's our only chance to shine. So let's stay together in Ghost We Trust. Talk to you guys next week. Have a good one. Bye-bye.